China's eye-for-an-eye response to U.S. tariffs has farmers fearing that overseas crop demand will tumble, rocking an already fragile economy for their crops. The world's biggest buyer of agriculture products levied a new 34% tariff on goods imported from the U.S., which makes it tougher for crops to cross Chinese borders. Worse yet, industry watchers are speculating that China may take the extra step of canceling purchases of American grain exports that are waiting to ship. China has already purchased over 22 million tons of soybeans for the 2024-25 marketing year, which began in September. It is the biggest buyer of U.S. soybean exports, even as competing growers such as Brazil and Argentina increasingly take what has traditionally been American market share. Analysts are unsure how much in previously announced U.S. soybean sales China jettisons, but it may be a sizable amount, as much as 300 million to 400 million bushels, said Rich Nelson, chief strategist and director of research with Allendale Inc. If this comes true, that could be over 20% of the total amount of U.S. soybeans expected to be exported in the 2024-25 marketing year, according to projections from the USDA. Because of the tumult of President Trump's tariff agenda, it is unclear how long China's new tariff, which came as a response to the U.S.'s 34% tariff on Chinese exports, may stay in place. We would love to say that this is a negotiation tactic by Trump. That would be a nice story, Nelson said. The disruption to agriculture comes as crop growers brace for another tough year. The USDA forecast earlier this year that farmers in 2025 would struggle with low commodity prices, as 2025 receipts for soybeans are expected nearly 9% lower than 2024, and corn more than 6% lower. Most active soybean futures fell 3.4% to 9.80 cents a bushel on Friday, their lowest point since December. The price decline brings crop prices further away from break-even, the price needed for farmers to cover the costs of inputs, such as seeds, labor, and fertilizer, among other necessities. Before Trump announced the April 2nd round of reciprocal tariffs, farmers were projected to receive over $40 billion in direct government payments, which includes help for farmers struck by weather disasters late last year. The USDA has yet to confirm if, with the new tariffs, farmers will receive economic aid to help them deal with reduced purchasing from countries like China. You know, the last time with Sonny Perdue as Secretary of Agriculture, they did have a program, but we are months, literally months away from understanding if that's going to be necessary, USDA Secretary Brooke Rollins said in an appearance on Fox Business on Thursday. While China escalated the trade showdown with the U.S., other nations appear to be more willing to negotiate with Trump to reduce or eliminate tariffs. On Friday, officials with Vietnam confirmed that they sought to negotiate with the U.S. to reduce the new tariff of 46% placed on Vietnamese goods to 0%. With signs of some nations being willing to work with Trump, CBOT corn futures turned positive Friday, and the most active corn contract ended up 0.6% to $4.60 a bushel. This comes after Mexico, the top buyer of U.S. corn exports, wasn't targeted for the latest round of reciprocal tariffs this week, giving traders reassurance that corn exports will remain steady. "We've taken them off of the concern list," Nelson said about Mexico. Some traders and analysts believe that soybean futures are due for a rebound soon, with the Chinese economy seen as being on weaker footing than during the trade war between the U.S. and China that started in 2018. "The Chinese economy is in bad straits," said Daniel Flynn, account executive with Chicago-based futures brokerage Price Futures Group. "They cannot sustain a war, meaning they need our market more than we need theirs."